Hi everyone, welcome back to Saheb Academy. Today in this 12th video of labor costing chapter, we are going to solve our third problem of overtime. And this question is from the ICAI study material, illustration 5, as you can see. And the interesting thing about this question is here the focus is on the accounting treatment of overtime premium. Okay, we are going to practically see how it is treated in cost accounting. But now before going ahead with this video, please make sure you have watched the previous videos of labor costing. I will put the playlist link in the description below. You can see over here we have 9 videos free to watch, up till 9, and then the 10th and the 11th video of labor costing is under Silver Club. You'd have to join the channel to watch them. Okay, and then this 12th video of labor costing, which is on the problem of overtime, third problem, this will be free to watch. Okay, so let's begin. Let's just read the question first. Now see here, in a factory the basic wage rate is 100 rupees per hour. Okay, this is the ordinary wage rate, or you can say basic wage rate, fine. And overtime rates are as follows. So here we have been given the overtime rates. See here, before and after normal working hours, 175% of basic wage rate. What does this mean? It means if a worker works overtime during the weekdays, during the weekdays, right, before and after normal working hours, then for those overtime hours the worker will be paid 175% of the basic wage rate. Basic wage rate is 100 rupees per hour. You have to take 175% of that. 1.75 we can multiply. In decimal I'm taking the percentage, so that's equal to 175 rupees per hour. Right, this is the overtime rate during the weekdays. Okay, but on Sundays and holidays they are saying something else. See that Sundays and holidays, 225% of basic wage rate they are saying. It means if the workers works overtime on holidays and Sundays, then he is supposed to be paid more. Why is that so? Because it's logical. Understand, it's his precious time which he is sacrificing for the company. So of course he has to be paid more than the weekdays, because holidays are more precious, isn't it, for the workers, right? So 100 into 2.25 we can say in decimal, so that's equal to 225 rupees per hour. This is the second overtime rate for the weekend. Okay, there are two overtime rates over here. One is for the weekdays and the other one is for the weekends and holidays. Is it clear? Okay, fine, that's the rate, fine. Then they are saying during the previous year the following hours were worked. Okay, previous year data is given. Now you will wonder why previous year data is given. See, it's really simple. Okay, it's for the calculation of something. Okay, we'll see, don't worry. They have given us, see, normal time in the previous year is 1 lakh hours, okay, 100,000 hours, and then overtime before and after working hours were 20,000 hours, and then overtime on Sundays and holidays were 5,000 hours in the previous year. In total that is 1,25,000 hours. Okay, fine. So this is previous year data, and then they are saying the following hours have been worked on job Z. Okay, so normal 1,000 hours, overtime before and after working hours, which means overtime on weekdays, it is 100 hours, and then on Sundays and holidays the overtime has been worked, that is 25 hours by these workers, okay, on job Z. Fine. In total that's 1,125 hours which have been worked on this job Z, job Z, whatever. Fine. Then the requirement of this question is, see here, you are required to calculate the labor cost chargeable to job Z and overhead in each of the following instances. Now see, the requirement is very simple. You have to calculate how much employee cost is chargeable to the job Z and overhead also, because in some cases what happens, suppose for example there is overtime due to fault of any department, then what do? We charge the overtime premium to what? To the department's overhead, right? In the overhead chapter you will learn that there will have something called as primary and secondary distribution. So at that time what we are going to do is we are going to take the overtime premium and just directly charge it to the that particular department which has done the overtime and the fault which is there, right? Okay, so that's the thing, fine. So that's the requirement now. we have to calculate the labor cost chargeable to job Z and overheads. Fine. There are three cases which they have given us. The first case is, see here, where overtime is worked regularly throughout the year as a policy due to the workers shortage. Okay, that's the first case. Now I have explained this to you in the conceptual video of overtime. Whenever there is worker shortage, what do? If overtime is required regularly because of worker shortage, what do? In that case, overtime premium should be absorbed under wage rate, right? And that increase rate will be called as average inflated wage rate. Now see, basically what will happen is, what we're going to do, from the previous year's data, we are going to calculate, wage rate. Okay, see, what we're going to do is, how many hours total we have worked in the previous year, we are going to take that data, multiply with the the normal rate and the overtime rate. So we will get what? Total wages that has been paid to the workers. Okay, total wages, monetary amount, in the amount, we are going to divide that by the total hours, 1,25,000 hours. If you do that, then we'll get what? We'll get the wage rate, and we call this as average inflated wage rate because we have considered overtime in that, isn't it? That's why it will be inflated, it will be increased. Okay, so then that rate we are going to use and multiply it with 1,125 because these are the hours which have been worked on the job Z, right? So in the job Z cost sheet, in job Z cost sheet, we are going to take the direct wages by multiplying with this, okay, 1,125, that rate into 1,125. Is it clear? Okay, so that's what we're going to do in that first case. And then see, as the second case, where overtime is worked irregularly to meet the requirements of production. So in this case, what do? This is irregular overtime. We also call this as healthy overtime. Here this is because of the production, so we charge this to factory overhead. Is it clear? Okay, then the third case, where overtime is worked at the request of the customer to expedite the job. In this case, it is at the request of the customer. So whenever it is at the customer's request, then what we do is we charge everything to that particular job only. Okay, so that's the thing. So now let's just see how all of this will happen. Let's just go to the solution of this. Now see, here we have the solution. It's really simple and straightforward. First, here I took the data that was given in the question. We have been given the basic wage rate, which is 100 rupees per hour, which we also call as ordinary rate per hour. Yeah, I took that. And then we have been given overtime rates. Two overtime rates are there, as I explained. One is during weekdays and the other one is during the weekends and holidays, right? So 175% of basic wage rate and 225% of basic wage rate. Basic wage rate is 100 rupees, so 100 into 175%, that's 175 rupees per hour. And then 100 into 225%, that's 225 rupees per hour. Okay, so now you have to understand, in this 175, what is there? There is normal element as well as overtime premium, isn't it? And what we have to understand properly, when we see the concept, what is this? Treatment of overtime premium, right? So we have to properly understand how overtime premium will be treated in cost accounting. Okay, because the normal element is same like normal normal wages only. Is that clear? There is nothing special over there. Then see here, and then the second rate also. Now the first case was what? The requirement I'm talking about. See here, the requirement was we have to calculate the labor cost that is chargeable to job Z and overhead in each of the following instances. In the first case, they told us in A that overtime is worked regularly throughout the year as a policy due to workers shortage. So in this case, what we have to do, I told you, in this case we have to calculate what? Average inflated wage rate. Yeah, we have to calculate that, and overtime premium will be absorbed under this rate, right? So see here, we are just going to increase the rate. See how it will happen. Okay, see, calculation of inflated wage rate. Okay, so what are we going to do is, first we are going to take the previous year data. Okay, in previous year, normal time was how much? Total. Okay, for total year, 1 lakh hours. So 1 lakh hours into 100. Okay, we need total wages. Understand this, we need total wages. So in total wages, what do we have? We have normal hours, we have overtime during weekdays and overtime during weekends, all the three. you have to multiply with the proper rates. Here 100 rupees, here 175 rupees, here 225 rupees, isn't it? Yeah. So see here, that is what we are going to do. Annual wages for the previous year for normal time, 1 lakh hours into 100 rupees per hour. Okay, basic wage rate, right? So that's equal to 1 crore. Okay, fine. And then you have to take wages for overtime before and after working hours. This is the weekdays overtime. Okay, 20,000 hours total were there in the previous year of this weekdays overtime, right? 20,000 hours. So we took that into which rate? 175. From where did we get 175? This thing, OT rate before and after normal working hours, 175. Just multiply, you will get 35 lakhs. Okay, and then you have to add wages for overtime on Sundays and holidays, right? So all the three you have to take, and it is 5,000 hours. Yeah, it is 5,000 hours. So 5,000 hours into 225, the rate which is there for the weekends and holidays, that rate you have to use. So that's equal to 11,25,000. Now if you add up all of this, it is equal to 1,46,25,000. Is it clear? These are the total wages that have been paid last year, previous year. Okay, so now this you have to divide by total hours, right? Total hours of previous year only. Here it's given 1,25,000 hours. Simple. When you divide that, you will get the rate, and this rate is called as average inflated wage rate. Why is that so? Why are we calling this inflated wage rate? You have to understand. See here, basic wage rate is 100 rupees per hour, isn't it? This is what you give to employee for normal hours. But now here what we have done, here we have included OT premium as well. Yeah, overtime payment is also included over here. See, this is the overtime payment now. Overtime payment, it's all included, and then we are calculating. So we are getting what? Average inflated wage rate. Yeah. Normally we are having overtime in the company regularly as a company policy due to shortage. So now this rate we are going to use for the costing purpose. Let's just say we got any job. Okay, so in that job we will prepare the cost sheet. Okay, cost sheet, and we will take the labor cost. At that time, let's just say 100 hours have been worked on that job. Then while taking the direct wages, the employee cost, the labor cost, you are going to do what? 100 hours into 117. Okay, that would be the labor cost allocated to that job. Is that clear? Let's just say another job came for 50 hours. Okay, 50 hours work has been done on that. Overtime is also there. Okay, so 50 into this 117. Okay, that's equal to 5850. This is the cost that will be allocated to that job. Is that clear? 5,850. Just example I'm telling you. Okay, so in this there is what? Everything. Normal wages as well as overtime, and then overtime premium also. Is it clear? Everything is included in that. See here. Now coming to the case A, overtime is worked regularly throughout the year as a policy due to worker shortage. So how much will be allocated to job Z? You have to understand OT premium is treated as a part of employee cost, and job is charged at an inflated wage rate. Now we have to see how many hours have been worked on job Z. How many hours? 1,125 hours, right? So what you're going to do, see here, total hours on the job into inflated wage rate. Okay, this is what you have to do. So that is equal to, see, 1,125 into 117. I gave you a couple of examples also now. It's the same way. Okay, 1,125 into 117, that's equal to 1,31,625. In this, what all things are there, you have to understand this properly. See, in this 1,31,625, there are normal wages also. Yeah, understand properly. See, on job Z, what all things you have put. See here, normal hours are there of 1,000, and then two types of overtime are there, isn't it? And each of these, there is normal element and overtime premium. Here also there is normal element as well as overtime premium. So you have to understand properly. Everything, everything is included in this 1,31,625. Premium is also included in that. Okay, and overtime normal element is also included in that. Is it clear? Okay, I told you now in the conceptual example. See, I told you there is in overtime payment only, in this 175 or in this 225 only, there is normal wages for overtime work, which is 100 rupees. Yeah, here in this case I'm talking about, and then premium payment is also there, overtime premium, we are talking about this treatment, but you have to understand how all things are treated also. Is it clear? You have to have that broad perspective properly. Okay, fine. Okay, moving on, then we have to move on to the case B. So let's just see, the case. Now, see here we have the case B. Overtime is worked irregularly to meet the requirements of production. So that means this is healthy overtime, and it is just because of the production. Okay, maybe due to seasonal demand. So in this case, you all know we have to charge the overtime premium to where? To factory's overhead. Okay, factory overhead. So that means you also need to understand what will be charged to the job, what will be charged to the job Z, because on job Z we have done overtime. But you have to understand the case is it is because of what? Irregularly to meet the requirements of production, right? It's because of that. So that's why overtime premium will be charged to factory's overhead. But there are some other things also. There are normal hours also. There are normal hours also in which there was no overtime. And then in overtime also there is normal element. So normal element of overtime and pure normal also will be charged to the job. Is it clear? Because those hours were worked on the job. Do you understand the logic? Okay, see here, let me just explain you. It's really simple. Basic wage rate is charged to the job. When they say basic wage rate is charged to the job, you have to understand they are talking about what? Normal hours. Okay, 1000 hours into 100, 1000 hours into 100, that will go to job. Okay, and then normal element of overtime also will go to the job. Okay, as direct wages. And overtime premium, just the premium. Now what is premium? Premium is what? In that 175 and 225, what is premium? You have to understand this. In this 175 and 225, what is premium? See, premium is 175 minus 100. If you remove the normal element, then this is premium, 75 rupees. Only 75 rupees should go to factory's overhead, and here 225 is there, right? So 225 minus 100, that's equal to 125. Only this should go to factory overhead. The remaining 100 is what? Normal element in the overtime, isn't it? Normal wages for the overtime work, that will go to the job only. See here in the job Z, direct wages, 1125 hours into 100, that's equal to 1,12,500. Is it clear? Now you will think, why 1125 hours? See, that's the total hours they have worked on the job Z. Okay, clear? In this 1125, there are pure normal hours, 1000 hours, and then there are 2 overtime hours, right? 100 hours and 25 hours. And in these two, the normal element is how much? 100 rupees, 100 rupees, isn't it? 100 rupees, 100 rupees. For all of this, here also it's 100, the normal, pure normal, and here it is normal element of overtime, which is 100, and here also it is 100. I just explained you in the calculator. 225 minus 100, 175 minus 100. I was removing the normal element to calculate overtime premium. Okay, so that's why. So entirely I took this 1125 and multiply with 100. I got this amount. This will go to the direct wages. In the cost sheet of job Z, direct wages will be 1,12,500 rupees. Is it clear? Simple and straightforward. So you understood everything. Now coming to the overtime premium. See here, overtime premium will be charged to factory overhead because the overtime is irregular and to meet production requirements. If that's the case, then factory overheads only. So see here, this is how you will calculate the OT premium. 100 hours and 25 hours. That's the OT. 100 hours and 25 hours in that job, right? So 125 into what? 175 minus 100, 225 minus 100. Here it is 75 and here it is 125. Is it clear? That's the premium now. Only premium element you have to take now. So that's equal to 7,500 over here, and here it's 3,125. If you add those two, that's equal to 10,625. This is just overtime premium. Understand? This is what? This is just overtime premium. Now this will be charged to factory's overhead. Is it clear? Did you understand the whole concept? Yeah? Okay. So you understood. This is the overtime premium which will go to factory overhead, and normal has gone to directly to the job. Okay, fine, simple. Then the next case we have to see, the next case is the third case, case C, where overtime is worked at the request of the customer to expedite the job. In this case, it is really simple. Everything will go to the job only, everything. Okay, the pure normal element in overtime, here two overtimes are there, so one more normal element for overtime, and then premium also, both premium will go in the on the job only. Is that clear? Everything will be allocated to the job. It's really simple, the last case, because the customer requested. So when we will prepare the job cost sheet or the quotation also, we will say to the customer, see, we have to make our worker work overtime, so we are charging you this overtime payment, entire thing. Is it clear? Normal as well as the normal element as well as the overtime premium. So see here, overtime is worked at the request of the customer. Basic wage rate and OT premium are charged to the particular job directly. Okay, everything is charged to the job. See, in job that we have already done the calculation, we don't need to do the calculation again. Direct wages is equal to 1,12,500. Okay, this is normal, this is just normal. Okay, this is just normal. Fine. Yeah, we saw now 1,12,500 is just normal, so that's the normal I have taken. In this there is what, OT also, OT normal also is there. Okay, pure normal, OT normal, OT normal. Okay, three things are there in this, and then OT premium separately we have to show. That's 10,625, the same calculation. Is it clear? But here it is directly going to the job only as direct wages. Fine. So the total labor cost that has been allocated to job Z over here in this last case will be, 1,23,125. Is it clear? Simple, you understood? In the first case, what happened? In the first case, we calculated inflated wage rate. Inflated wage rate came out to be 117. How did we calculate this? Total wages divided by total hours. From the previous year, we will take the hours, multiply with the current rates, we'll get that, and divide by total hours, we'll get the average inflated wage rate. Multiply this with the hours that you have actually put in total on the job. And when you will multiply, everything will be calculated together. Okay, pure normal, okay, OT, normal element, as well as the OT premium, everything will be included in this 1,31,625. Okay, this is how the costing will be done when regular overtime is being done because of worker shortage. And then here there was irregular overtime because of the production requirement. In this case, what we do is overtime premium goes to factory overhead, only overtime premium. Fine. The remaining normal, yeah, pure normal and then OT normal, they will go to the job, they will be allocated to the job, okay, as direct wages. Fine. So that's the case 2. And in case 3, here the OT is because of customer, at the request of customer, the overtime is worked at the request of customer, so everything will be charged to the job of the customer. Is that clear? Simple and straightforward. I hope you have understood this. If you have any doubts in this, please comment down below, or you can take a screenshot and just ask your doubts straight on Instagram. Okay, so that's all for this video. See you in the next video.